I've got another blue chip buy alert here on the Investor Channel. Last one that has had a few months to play out was Home Depot. This was back on May 16th. The stock was at about $285 per share at last check. Home Depot currently sitting at $315 per share. I've got another blue chip buy alert that I think is going to work out very nicely over the next, we'll call it 6 months or so. And that is good old Bank of America Corporation, ticker symbol BAC. Over the last year, it has not, and I repeat, has not caught the rally, and that is a good thing, folks. You actually want to buy these stocks when the money hasn't rotated into them, because I'll show you when we get over here to the stock chart, when the money flows back into a Bank of America, the upside potential that you have here over the last year. Stock's down about 4.6%. That includes a rally of about 4.6% today after the company reported their Q2 earnings. Revenue coming in at $25.2 billion. That was about 3% year-over-year growth. It beat expectations. Credit card delinquencies, if you've been racking those up and not paying your bills, well, you're showing up in the data. But here's the most important thing. The charge-off rates are still not really back to where they were kind of before the pandemic. Net charge-off rate for Bank of America in the most recent quarter, about 1.9%. You were closer to 2.7% all the way back in 2019. That's a slightly double-edged sword. It's showing you that things are a little bit better as these rates tick up. The headline's a little misleading in the fact that the delinquency rates are ticking up, but they're not back to where they were. And that's also a little bit maybe of the downside, is they've got a little bit more room to run before they get back to that. We'll talk about that more here in a second, but here it is from a visual perspective. You are seeing the consumer net charge-offs over at Bank of America just continue to kind of creep up. Commercial side as well has stayed flat more or less for the last 3 quarters. The company is paying you a dividend, so even if we're not correct on the upside potential in the equity stake, you're getting a growing dividend over at Bank of America. They plan to raise their dividend by 9% in the Q3. Currently, the stock's sitting at about a 3% yield, so not quite as good as like a money market fund or the high yield stuff that's out there, but you do get that upside in the equity shares if they were to appreciate. What we're seeing in the 2 major banks that we've covered here on the channel, JP Morgan and Bank of America, average deposits are essentially kind of going sideways, and in this graph represents more or less going down, but not drastically. But still, your average loans and leases, amazingly, people continue to take out more and more loans. Obviously shows up in the revenue number, coming in at $25.2 billion. That was over where you were a year ago at 22.7. And again, that was about 3% growth year over year. Now, what we don't see at Bank of America that we saw over at JP Morgan is a really, I mean, they're controlling expenses over here, so it's still really good. They're just not growing their revenue as quickly as JP Morgan did. Your non-interest expenses went from $15.3 billion up to over $16 billion. That gave your income before your income taxes about $8 billion, off $25.2 billion worth of revenue after all your expenses, or most of your expenses. You get to about $8 billion of operating profit. Last year, you were sitting right about 6.9. Now, last quarter, you were over 9 on higher revenue and slightly higher cost quarter over quarter. Pull down to a net income number, and you got $7 billion worth of net income, $7.1 billion of net income, compared to less than $6 billion a time period ago. Here's the other thing that you want to factor in when you look at these large bank stocks is your book value per share over at Bank of America, sitting at just $32 per share. Currently, even after today's rally, shares of Bank of America trading below book value. And if you want to know from a historical perspective how that relates to Bank of America, the company is sitting at just under 1 times book value, sitting at about 0.93x book value. Anytime you have been below 1 times book value on Bank of America over the past 5 years, it has been an excellent time to buy, since shares of Bank of America can trade upwards of 1.25 times, maybe as high as 1.5, 1.6 times tangible book. That is where your upside happens to be. From a technical perspective, we've pointed this out numerous times here on the show. You date back a chart going back nearly 10 years. Obviously, the great financial crisis kind of threw a lot of financial stocks, including Bank of America, in a wrench, if you will. But since then, since the recovery, the stock has steadily been making higher highs, higher lows. Anytime you have gotten down to this navy blue line and you've only touched it 1, 2, 3, and now 4 times over the past 10 years, it has been a buying opportunity for Bank of America. It is supported by the book value valuation. It is supported by the technicals. It is supported by the absolutely rock solid financials that you have over at this company. And if this company just simply continues this technical pattern as they continue to buy back the shares, they continue to pay a strong dividend. Well, you have, if you move back to the top of the channel on this stock, you have quite easily 70, 80, 90, maybe even potentially 100% upside in a boring blue chip bank stock. This is how you make the consistent money in this stock market. You don't chase these penny stocks with a large segment of your portfolio. The large segment of your portfolio, the wealth creating stuff, should be in this blue chip stuff like Home Depot, which we alerted you back in May of 16, just 2 months ago. It was at 285, and now it is sitting at 315. I would expect similar performance as it relates to Bank of America. Folks, we've got an exciting earnings week coming up. We've got Netflix, and we've got Tesla, and we have Taiwan Semiconductor this week as well. We'll be back again very soon for those. Until then, good luck with your investments.